Good morning, everybody. It's Chris Blandin De Chalain with the 4 major notes update for the 28th of August 2013. Okay, 4 majors this morning, looking at the euro against US dollar using the FX8 ultimate template to start with. Indicator box to back everything up. Let's have a look and see what's been happening. Quite clearly here, where price is trading at the moment is a current resistance level. We had an attempt recently, a tweezer top formation formed at this resistance level, and we thought, well, price would likely to fall. However, we wanted to see confirmation of that. Ideally, a candle closing lower than the daily 23.6 fib here from the current low to the current high. That failed to materialize, and the overall sentiment still looking to move up. Euro still wanting to gain strength against US dollar, and we've had a number of attempts at this level recently. However, all the candles we've seen recently have all been indecisive nonetheless. Small bodies, a lot of wick, confirming that indecision, and that indecision coming at a resistance level. So if this is still to remain positive upside, we do need to see that break. We have to see a bullish engulfing candle close higher. We did get one. However, the follow through failed to find support above that resistance level and to kick on to the upside. We do need to see that happening. And you can see quite clearly that price isn't trading that far away from where the weekly fib is at the 50% line. However, between these 2 points from these current highs here to the level is still a healthy 80 pips and change. To that level, so we could still make money to that point. However, we want to see price action dictating. We don't want to see a indecision. We want to see a decisive candle. Once we get the decision candle, then we can start looking for opportunities. However, the longer price finds resistance here, the overall sentiment long term will potentially start to change to negativity, because clearly there's not enough momentum behind price to move it higher. And if you're going to get that, then people are going to start walking away, because you're not getting any value return on the money you invested. So it's imperative that if the euro is still to remain long-term positive, we've got to get above this level soon. Sterling against US dollar. Here again, what we've seen clearly is a failure recently. Price failed once it broke above the weekly high here, which happened to be a prior high that we saw back in April of this year. On the weekly fib, the 50% line, price failed to actually move any higher as we headed into the 61.8 fib retracement, which was a prior high after price broke above the institution moving average. The good thing is, though, sterling is trading above the institution moving average. This is the only second time that we've seen price trading above the institution this year. So the fact that we're trading above the institution is a good sign, because it's a healthy indication that price is looking positive long term. And trading above the institution is giving us a lot of food for thought for further upside. However, if you look at the indicator box, painting pretty much a negative picture, and it's primarily because we've seen pricing the price drop recently. We've almost spent a full week after this bearish engulfing shooting star formation here has engulfed the prior 4 days of trading, and since subsequently we've seen price falling. Failing to actually find support at the 50% retracement here is what we would like to have seen. So the breakout, the pullback, and then we wanted to see the continuation higher. That failed to materialize as price broke lower, then went the pullback, and then the continuation lower. So as it stands at the moment now, prices are looking to the downside. Negativity is there. We have a red arrow. However, the blue candles still indicate potential upside. And if you look at it, prices are still making swing highs. We have up until this trend line over here, this intermediate trend line support around this area here at around the 15,400 mark. But ideally, long-term sentiment, if it's still to be governed negative, and you can see the R-squared is complementing this negative sentiment intraday, then we could be ideally looking at long-term targets roughly around the 38.3 here on the weekly, around the 1541.20 mark, which is not too far off. So back towards the institution moving average, would potentially look at a long-term target if we get any further sentiment downside. RMO is still above the zero line, however, moving into that zero. So still a nice strong trend, and you can see swing high, swing high, swing high. If price breaks below this institution the institution moving average and the 38.2 here on the weekly, then we're going to see a break of a major trend or swing, and that would start looking favorably to the negative side. MACD has dropped below the zero line, and that's primarily because we've seen a pullback recently. So as it stands at the moment now, look for that intraday sentiment. For sterling, we have Governor Carney speaking later this afternoon, or early this afternoon at 12:45 p.m. GMT. So let's see what he has to say, because he might throw in something in the mix here that could actually have a vital influence on price for sterling against US dollar later today. US dollar Swiss franc price, yet again, as I mentioned yesterday, still overall looking negative, as price hasn't been able to bounce like its European counterpart, euro against US dollar. We saw here again price trading at a major support and resistance level. However, tweez a bottom over here formation, but we didn't get that move to the upside. We wanted to see a clear bullish engulfing candle close above the weekly 23.6 here, which would definitely confirm that this formation over here was clearly a bullish intended candle. However, that failed to materialize, and we end up with a shooting star, a very negative exhaustion candle, and surely prices have reattempted the downside. The RMO has remained below the zero line, so we're making swing lows, which is not a good sign, and our MACD is clearly flat and just below the zero line, which is not a good sign. So you can see yesterday's candle, bearish engulfing, has taken us below this level. However, we want to see a lot more from that. Prices are consolidating at a price support and resistance. I want to get below that, a lot of aggressiveness, and then I can see a clear target to my next level, which would be my weekly fib here at the 38.2 is my next target. And between where price trading right now to this level is a healthy 311 pips. Take away the spread, you're still walking away with 300 pips and change. So would like to see a nice bearish engulfing candle close lower. That would definitely drive prices to the downside. You can see the overall sentiment here on a long term, very much in favor of negativity. However, we are seeing consolidation on our shorter time frames as we head into this major support and resistance level on intraday. So we want to see a bearish engulfing candle close on our daily. That would lead to generate a lot of sentiment to the downside, and then we could look for potential shorting opportunities for the foreseeable future. Last bit of the day, the US dollar Japanese yen. As I mentioned, failure to get above the 50% retracement on the daily would then look negative, and sure enough, yesterday we saw the US dollar falling against the yen and moving back towards the weekly fib here at the 23.6, but also the institution. And you can see what's happened now. Prices have actually bounced at the institution moving average and now consolidating around or trading around the 23.6 on our weekly. So here you can see the overall sentiment negative. However, the bounce has clearly brought that positiveness that we're seeing intraday, but a very mixed signal on our long term, and primarily because price is moving within this consolidative range. It's almost a squeeze pattern. And if we see prices failing to get below the institution, then we're going to see a reattempt of the 38.2, which we're seeing right now, but back towards a 50% retracement on the daily, and still making swing lows. Ultimately, what's going to happen, we're going to get a squeeze pattern, which is going to see a breakout, and that's what we want to see. The overall sentiment on the MACD, the RMO is still very much negative, and the MACD has gone positive because we saw this bounce over here on the institution not too long ago. So squeeze pattern is as such on the US dollar Japanese yen. We would like to see if this is to be a genuine negative scenario. We want to see a clear break and close lower than the institution. That'll be the first time we've seen prices trading below the institution since October of 2012, guys. So get close below that institution moving average on our daily would be a very negative sign indeed. So be patient here, wait for the breakout either side, and then trade the outcome. That's it, guys. Short and sweet today. Please, if you are using this particular template or any of the Serene Education templates, back it up with sound money management. Got to have a money management objective. That's got to be clearly put into place every single time that you trade. You want to be trading with the right money management rules if you have the fantastic template. So keep it as simple as possible. Keep mentioning that. Major support and resistance levels and weeklies, monthlies. Look at where prices are trading into those levels, and look at candlestick formations. They'll lend a lot into price action, trying to dictate or understand where prices are likely to fall to. Other than that, going to leave you to it. Not much news out today. Pending home sales figures for the American market this afternoon. We have Carney speaking at 12:45. We've just had some news this morning for the German consumer climate figures, which were a lot lower than the expected or the forecasted figure, which is not good for the euro. We are seeing resistance levels on the euro. Could that reflect? We have money supply year-on-year figures coming out in IM GMT. That could be also very, very important for euro. So look at the news just to see if there's anything that could back it up. Other than that, I'm going to leave you to it. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.